Hi, it's Frank Lehane at Wellspring Wealth Coaching, LLC. I want to thank you for joining me on this audio. If you're listening to this audio, chances are you're ready to discover a whole other way of investing you haven't heard of yet, and you'd really love to change your investment strategy for stress-free investing. If this sounds like you are definitely in the right place. I want to thank you for listening to this audio because there are many choices in how to solve the problem of investing. So to show you some appreciation, I have a few gifts for you. The first gift is a downloadable ebook of Mark Matson's Investor Awareness Guide. Now, if you don't know who Mark Matson is, he's the financial advisor who has his own TV show called Matson Money. This ebook is a 22-page, comprehensive, yet simple guide to stress-free investing with great content and high value. I highly recommend it. Even as a seasoned financial advisor, I was able to gain tremendous insight. You definitely don't want to miss this one. All you have to do to receive your copy is get to the end of Lesson 7 and follow the download instructions. The second gift is my free email newsletter that comes once a month. Okay, so here is the 7-part mini-series you requested entitled Investor Health Lessons. 7 free lessons on how to invest stress-free that even the guru brokers don't know or won't tell you. Before we begin, let's get organized. Do you have your 3-ring binder? Did you print out the lessons? Are you ready with your notepad? So if you have a question at any time, you can write it down and shoot me an email at frank@franklahane.com, and I'd be happy to answer that. Okay, so a little housekeeping first. Before we get on to the lesson, allow me to read our disclaimer. Wellspring Wealth Coaching, LLC is a California registered investment advisor registered with the Securities and Exchange Commission. All materials presented are intended for informational purposes only and not as investment advice or as an offer or solicitation to buy or sell any investment products or securities. Past performance is not indicative of future results. Investing involves risk, potential tax implications, and the possibility of financial loss. Investment risk is the responsibility of the individual. Now, on to the lesson. Welcome to day 1, entitled No One Person or Committee Can Beat the Market. Now, this is a very hot topic and a personal one, too. You're probably wondering why I even chose to be an investor coach and educate clients on these topics at all. Well, you see, I'm very passionate about helping people break free from their depressed feelings about investing. I've seen marriages crash, homes lost. For example, as I went around my upper middle class neighborhood of nice homes, I'd see more and more homes with bank-owned signs in the now unkempt yards, victims of the financial meltdown. I've seen fortunes reversed. For example, hardworking people's 401ks nearing retirement age decimated to a fraction of what they once were. All of it practically gone. And people losing heart, suffering heart attacks. And the list of sad and tragic circumstances goes on and on. I've seen and experienced firsthand the tech bubble losses of 2000 and then again in 2008 with the financial meltdown. It became apparent to me how desperate people had become to find answers to fix this mess so they could return to growing and protecting their money. How many investors were blaming themselves for not being better fortune tellers or blaming their brokers for not being better stewards of their money? I made a commitment then and there to myself to find the changes that would help people return to stress-free investment strategies and return some happiness to their lives about investing. Again, what I've discovered was a different approach to financial health and decided to share it with others. Little did I know back then that I would leave the world of traditional advising for a much healthier and happier career in investment coaching. I am seeing people's lives transformed by making small changes that are really making big differences. So it's my hope that as you journey through these 7 lessons, you will find that one special something, an idea that will truly bless your life. So take this free test drive seriously. Know that it is important to continue these lessons all the way through. Commit yourself for the next 7 days to read and or listen to the series so you can learn how to invest stress-free and know what your brokers won't tell you. Let's get started. Investor Health Lesson 1. No one person or committee can beat the market. Smart money managers, advisors, and planners have great difficulty performing better than the market. Most of us would like to beat the market, but as we'll see in this lesson, even many smart money managers, advisors, and planners have great difficulty performing better than the market. To help you better understand why, let's begin with a few definitions. Active investors, brokers, advisors, and planners all try to beat market rates of return using traditional methods like stock picking and market timing. Stock picking is trying to predict which stocks one should own to beat the market. Market timing is trying to predict when to be in or out of the market, or when the market will move up or down. Now, wouldn't we all love to be able to tell the future by using these methods? Can you think of anyone you know who could accurately tell the future? It seems laughable, right? It's been said that a monkey throwing darts at a stock chart has as good a chance of picking stocks as the best active manager. If you examine the typical retail mutual fund's prospectus turnover rate, you will immediately notice that the annual average turnover rate is 115% or higher. Turnover rate is the amount of times all of the holdings or securities within a portfolio are sold and replaced again with different securities. Now, does it make any sense that the investor portfolio your broker or your advisor originally put you in a year ago is now unrecognizable to you a year later? What's going on here? 115% annual turnover rate or higher. Now, is this anyone's guessing game or what? What this means is that your money manager has played the round robin game on the original bucket of stocks and bonds you bought, and he plays this 5 days a week, 50 weeks a year. And all this activity costs you money in trading fees, taxes, and commissions. And where do they collect these fees, expenses, and commissions? Well, they take these fees from whatever returns or principal you have in your account. That's where. I hope you're beginning to see why tons of your money and time are spent trying to beat the market. Professor Ken French of Dartmouth School of Business estimates that investors with lots of help from their brokers and advisors collectively spend $102 billion per year trying to beat the market. It becomes clearer now why brokers and advisors are paid extremely well to be your personal fortune teller. But the times are changing. Today's savvy investor understands the importance of having an investor coach over using a traditional planner or broker. The Investor Health Lesson Series is about stress-free investing behaviors. I would argue that your hard-earned dollars are being devoured by active management that cuts deeply into your rates of return instead of capturing gains as they occur. And that is not a stress-free activity for anyone. So what's the lesson? Basically, you sustained a net loss even before your money is invested in the market. That doesn't make any sense, does it? And it's certainly not stress-free. Now, I'm not saying that you shouldn't hire people to help you grow your money. What I am saying is investing shouldn't start off with a net loss. Someone gives a broker $1,000 only to see 900 of it actually invested with no verifiable benefit to you, the investor. Stress-free investing requires a mental shift. Stop speculating. Speculating or gambling is risky and full of stress. So stop it. No one deserves to be unhappy hoping that they can beat the market. Here's a tip for you. Hire an investor coach to teach you about asset class investing, efficient portfolio construction, and fostering prudent investor behaviors. These are the topics that brokers do not want to spend their time with their clients talking about. In fact, many view this as anti-productive because it slows down the investor in making fast decisions. You've heard that knowledge is power. Knowledge applied is power. I hope you've enjoyed this lesson. Stay tuned for day 2, where I focus on how to avoid the trap of being over or underweighted in your investment portfolio, which, by the way, increases risk. So, you definitely do not want to miss this critical topic because it's important. As usual, shoot me an email if you have any feedback or questions that I may be able to assist you with. Now on to day 2, where we'll see how being under or over diversified in your portfolio can actually put you in way more of a risky spot than you even know. See you on day 2.